Welcome, everyone. Happy New Year's. Today, we're going to talk about the new COVID relief package that was announced and signed into law on Sunday. We're primarily going to be focusing on the PPP rounds funding that came about. We'll also touch a little bit on EIDL. And if anybody has any questions, feel free to ask about something else. Next week, we're going to do a webinar on the unemployment and the stimulus checks that are now going to be rolling out again. So today we're going to go over the changes to the original PPP and EIDL grants. There's quite a lot, and it has some great outcomes for us. And then we're going to talk about PPP2, as it's being called, the second round of PPP funding that's being made available to businesses. And then we have some questions that were sent in, so we'll go over those. So the largest and best change to the original PPP loans is the fact that now Congress has solidified that all expenses paid with PPP funds is 100% deductible. Before this, they said that the loan forgiveness is not taxable, and the IRS was using that to say double benefit, tax benefit rule. You can't benefit twice from this money for free. Therefore, you cannot take the deduction. Congress has come back and said, that's not our intent. Our intent was to make this basically give out free money, leave it an expense, leave it non-taxable for loan forgiveness. So, I mean, this is going to keep your net income as what it should be. It's not going to raise it artificially at the end of the year. PPP loans are not going to impact your income statement anymore. And forgiveness is now going to increase your basis in S Corp and partnerships. So that's a really great thing. Changes to the original PPP. So there's some expanded eligible expenses that now are available. So some of these are covered operation expenditures, which is like moving your business to the cloud. So getting software that can track your inventory, that can track your time off, that can track your employees. If you need cloud computing services, that all will count. Covered property damage costs. So this is only with the protests and the riots that happened during 2020. It's not really that widespread that it's going to be used. There are some businesses that lost out huge on this, but for the most part, it's not going to be a huge use of PPP funds. Covered supplier costs. So this is orders of inventory that you placed before you started your covered period. So this could be, if you were expecting a large group of sales in May, you had to place that order early February, that's going to be your covered supplier costs. And then covered worker protection expenditures. So this one is what I find the most fun. You can get a drive-through put in and use PPP funds for it. Sneeze guards, personal protective equipment, sanitation equipment, setting up an off-site testing location for staff. It's kind of the broadest and one of the most interesting, in my opinion. So changes to the EIDL grants. So EIDL grants have been specifically identified as non-taxable grants. So again, your S Corp and your partnerships, it's going to increase your basis. EIDL grants are also not going to count against your PPP loan forgiveness. So if you remember before, if you had a $100,000 PPP loan and a $10,000 EIDL grant, the max forgiveness you could get was $90,000. Now you can still get forgiveness of $100,000, and that $10,000 grant is going to be non-taxable income. So you're going to, in theory, get $110,000 total, whereas before you would get $110,000 and then have to pay $10,000 back, netting you $100,000.
So our suggestion here is some of our clients have already paid back their EIDL loan. So if indeed you did that, then you should start to reach out to the bank to find out how you'll get those funds returned to you. And if you have started paying on the EIDL loan, I would stop and wait for further instruction from your bank, because that should come out shortly that the EIDL loan will be forgiven as well. And if
The grant.
the
sorry.
grant, sorry, not that, yeah, because of course there were EIDL loans that are completely separate from any of this, what we're gonna call free money, right?
So keep paying those loans, but anything on your PPP, if you had a balance because of the EIDL grant, you want to hold off on paying that.
Yes, and if you're in the process of receiving forgiveness, know that your forgiveness should come back inclusive of the EIDL grant.
So, I mean, in short, all of the money you've received from the federal government during the pandemic is going to be forgivable, and it's also not taxable, at least at the federal level. States have yet to really weigh in too much, issue technical release guidelines on what's going to happen at the state level. So that's a wait and see. And what happens if we already have filed? So Congress ordered in the 5,600-page bill that the SBA has 17 days to produce a plan for those who have already filed and received forgiveness to amend their filings. So it should be ready within the next 2 weeks or so. And then, so the most common amendment that we expect is the EIDL grants. They're going to need to be fixed because many people received both before it was known that this would have to go against your PPP loan forgiveness. And then, so here's one thing though. If you've already filed for forgiveness, and let's say you did put in a drive-through, you cannot amend your filing to include the new spending categories. So PPE spending, covered damage loss, covered inventory, none of that can now be, if you have already started filing, you cannot include it. It is strictly the payroll, mortgage, mortgage interest, rent, and utilities. All right, so PPP2. So it's pretty much going to be very similar to the original PPP loans, and they're going to be made available soon. Banks are still working on getting their directives and all of their issues settled, and they should be ready to go the next few weeks. So let's be ready. It's very similar. The new eligible expense categories that we talked about earlier, those are going to be included. But the new rules, the new qualification rules, you have to have less than 300 employees. You had to have used or will have used the full amount of funds from your first PPP loan. And you must show a 25% reduction in income for any quarter in 2020 compared to any quarter in 2019. So, quarter one to quarter one, quarter two to quarter two. There are some special exceptions that we're going to talk about in a minute or two. But that's the basic rule, is that look to the year before. If your quarter is down 25%, you'll qualify under these rules. That being said, the good faith certifications are now more obvious and are going to be more important. So during round one, the good faith certification was there, but it was often overlooked. For those of you, the good faith certification was basically saying, I need this money, I can't get money elsewhere. Without this money, my business is going to go under. And I have no other stream of income. I have no other businesses down. A lot of people overlooked that at the beginning of all this pandemic, when everybody was applying, everyone's business was down, and then a lot of businesses rebounded. So it caused a big stir over the last few months of, did we violate this good faith certificate? Now, before you take the loan, you must certify that this money is necessary for the continuance of your business. This money cannot be, so if you're showing a large profit number at the end of this year, it's hard to say that this is necessary for your business to continue on. And that's what they're really trying to stop, is people from creating these large profits and continuing to take funds.
So as you all are aware, there are many businesses that significantly have been impacted significantly, i.e., theater, any sort of entertainment, movie theaters, gyms, yoga studios, all of restaurants, all of these businesses are either operating at 25% less capacity or not operating at all. And so that's where this money is really intended for. And they're going to start to crack down pretty significantly to those businesses who can't necessarily justify that. The first go around, I think we all learned a lot from it, and the interpretation of what was necessary was lenient. And this time around, we're finding that in that document, it's very clear that these funds are meant for businesses that need the money.
Now we're going to go to some questions. So this was sent into us a few days ago by one of our clients. And I understand that previous PPP recipients may apply for another loan, provided that they have fewer than 300 employees. They have used or will have used the full PPP loan, and that they can show a 25% decrease. Question is, how do we show quarterly revenue decline when we only file annual revenue figures? So you'll have to do a breakdown on, whatever accounting software you use, whether it's QuickBooks or NetSuite, or I think a lot of people use FreshBooks now. That one is not really advisable, but you have to break it down by quarter. So you can't show, usually it says total only as a drop down. You'll have to change that to quarterly. And then you can do a year-to-date, a comparison compared to last year, and it will show you quarter one, quarter two, quarter one of 2019, quarter one of 2020 next to each other, and you can look.
I mean, even if you're doing your books manually and you're not using any official software, you're going to have to tally your data of, what income did I receive in January, February, and March, which would be Q1, and what expenses did I pay in that same period. And so, the numbers have to be reported quarterly.
And then the next question is, oh, sorry about that. Our business was formed midway through 2019, so quarter one and quarter two revenue was zero. Is there a different method for a new business? Yeah, so if your business was not in business for the full year of 2019, let's say you came into existence in quarter four, you can use quarter four of 2019 with any of the 4 quarters in 2020. And then also, if your business was not formed at all in 2019, let's say on January 15th you started, you can use quarter one of 2020 and compare it to quarters 2, 3, and 4 of 2020. The only caveat is that you need to have been in business before February 15th of 2020 to do that. So, okay, so here's a question. How do we know if our EIDL grant was forgivable or a loan, which is not forgivable? So
I can help with this. So the EIDL grant was a maximum of $10,000, and it was basically you got $1,000 per employee. So many of you who are sole owners may have received a check for $1,000. That's how you would know, first of all, that the EIDL grant would be based on the number of employees you have, and it's a strict, round number, 1,000, 2,000, 3,000, up to 10,000 max. The EIDL loan, you would have known because you would have received lots of documents, number one, to sign. The EIDL grant really just fell into people's bank accounts. You went online, you applied for it, and then all of a sudden,
days later,
it was in your bank account. And many people didn't even realize they got it until many months later. But the EIDL loan, which is a true loan with special terms, was, a typical loan document with all of the forms that you needed to sign.
And also, if you, cannot find anything about it, they have released under the Freedom of Information Act, Excel files with every single PPP loan, every single EIDL grant. I don't really recommend downloading them to keep that as a last resort. Just opening one takes a few minutes. There's so much data in there. But as a last resort, if you're filling out this application and you're thinking, did I get it? I don't remember. That's where you look.
We have used the information, and it appears to be accurate. But again, it's a mountain of information. So I would suggest only using it if it's absolutely necessary.
Yeah, my computer definitely does not like me doing it. Gets a little angry. Yes, the same 25% reduction does apply to nonprofits as well.
And so ideally, one way to think about it is in the second quarter of 2019, you would have expected a significant decline in that same quarter of 2020, right? Because when the pandemic hit in March and businesses were forced to shut down and whatnot, you would see, that significant decline. But what we have seen is, although in the second quarter, business was down significantly for some businesses, in quarter 3 and quarter 4, business was actually up. So overall, that's when those testaments come into play to say, yes, I do qualify based on the terms of this new PPP loan, but do I need the funds? Will my business survive if I don't get this money?
They also lowered the PPP down from $10 million max to a $2 million max. And also there will be new applications coming out for forgiveness that are supposed to be simpler. We'll see what happens with that. I think they've come up with new applications a few times now.
And two, just an update on any forgiveness application that Joe has helped prepare. I think to date, everyone has received full forgiveness. Not that we would have expected otherwise, but we're seeing the forgiveness come in as expected, and banks are getting better and better at it.
And the EIDL loan, that is one of those things that, some of our customers that have gotten both of those, I know I've reached out to a few banks to say, hey, according to the new rules, we're supposed to get all that back. Be patient with your bankers. They are just in the same boat as all of us. They don't really know what is happening at this moment. It was a 5,600 page bill, and there's a lot of details that they're still working out. They're not making all the decisions, and they're trying to figure it out for you as well. When and how? So your bank should reach out to you for PPP2, and I would assume it's going to be at least another week, just because of, one, the holiday, people have been in and out, and two, just getting things up and running, because now they're going to, I'm sure banks, if you remember back when the first PPP loan came out, banks, it took them a long time to get their applications out, and then as soon as they got out, they got overwhelmed and they shut down. So I'm guessing banks are going to try to learn from the first PPP, as well as they need to create a new formula and a new set of rules and guidance for these new qualifications.
But I would encourage you all to just reach out to your bank if you feel